welcome to this brand new episode of The Cover, a show where we share a sneak peek of the latest Business Today magazine with all our viewers. I'm Sakshi Batra, and joining in with me on the show, I have KRISHNA GOPALAN, Executive Editor, Business Today magazine. I also have with me SMITA TRIPATHI, Senior Editor, and BINU Paul, Senior Assistant Editor at Business Today magazine, who will all be discussing the cover story and the other important stories that you can expect to find in this new issue. Welcome, everybody, and great to have you on this issue. And now to showcase the first glimpse of the magazine to all our viewers, here you can see Sanjeev Puri, Chairman ITC, and the cover story really focuses on the transformation of what has been primarily known as tobacco, a secret company, to now an FMCG behemoth. So that's going to be the first focus of our show today. Let me take it straight across to Krishna. Krishna, so the ITC stock on the Lal Street has actually been quite smoking hot. I mean, vis-a-vis the underperformance of the last 3 years, 4 years odd, we've seen a 43% jump this year on year to date, on an ITC stock vis-a-vis when you compare it to Sensex, which has actually slipped by 1%. So huge outperformance is what we've seen on ITC. Would you, attribute this to the big shift that ITC is going through from tobacco to an FMCG leading? And what's really leading to this optimism? Help us understand that.
Yes, smoking indeed. That's quite a punch, actually. Thank you very much. Great to be here. This is really the story of a transition for a company that came from behind. Really started off with the FMCG business about 20 years ago. And in every sense, a complete startup. But they built very, very smartly on the back end of the success in the tobacco business. Be it the supply chain, be it the fact they had a fantastic distribution place. And most importantly, what is unknown to most people is they had a fantastic set of brands and tobacco business all built in the absence of advertising. So when you work in a situation where you have such advantages and also handicap, it really laid the foundation for what lay ahead as far as the FMCG business is concerned. They started in a very small manner with confectionery. They did a lot of things here and there, but the big breakthrough eventually came in when they created what they call a set of really the mother brands in that sense. If you look at Sunfeast today, if you look at Ashirwad, they have a set of brands which are not leaders just in their category, but they managed to make the transition from segments that are largely unorganized to becoming organized and then attain market leadership. I think Atta is a great example where all of us are used to just going to the neighborhood dukan in that sense and getting the stuff crushed. And here you had the opportunity to just pick it up off the shelf, which is remarkable. And today, whatever you say, Ashirwad remains a top of mind brand for them. So the ability to identify these large white spaces where a significant market opportunity existed and then go about it, which is one part of it. But if you look at biscuits, they realized that the big opportunity lay in cream biscuits. And you had guys like Britannia and Parle who had a bit of a presence, but they believed that the market was transitioning to a cream biscuit thing. So they got in Sunfeast and they topped it up with Dark Fantasy. So now you have these two fancy brands, different price points, and they have about I think almost a one fourth share of the cream biscuits market here today. So they've actually done a few things. They've done a few things well, but they've done it with a remarkable level of frequency and agility.
Would you say that ITC has really got its FMCG game right? Because when you compare with the biggies like HUL, Nestle, Britannia, is it on the right track to be one among the top?
They've done one thing right. If you look at the overall FMCG portfolio, it's about 75 to 80% that's driven completely by foods. So if you look at ITC's revenue vis-a-vis, 83% comes from foods. So they're actually mirroring what the market is actually following in that sense. So when I say foods, it could be starting anything from the noodles all the way to biscuits. So, and the demand for food in a package form, that's never likely to come down. So, and as long as you can get the variants right, if you can identify the right slots in the market, your game. And I think where they got it right is quality, and they have a fantastic backend. If you look at the wheat supply chain, if now you have the dairy supply chain, and that ensures that quality products come in time, quality raw materials come in time, and most importantly, there's a situation where quality is always paramount, and they manage to get these equations completely in place. So end of the day, you have a high quality product topped up by big ticket distribution, because FMCG distribution can make or kill a brand, and they've understood it very well. So they've done that. And they've also made a transition to online. So you don't have to go to the store to pick up a packet of Sunfeast biscuits. You can sit on Amazon or Flipkart and you can do that.
What does future hold for ITC? Because it's not just the FMCG that we're talking about. They also have a paper business. They also have a hotel business and agri-commodity business as well. So it's going to be a well-diversified conglomerate that we are looking at getting emerged here. So what do you expect?
Well, you speak to most people. I think the big anticipation is when they will demerge the FMCG business.
Hmm.
And you're speaking of 16,000 crores right now. You mentioned papers and you mentioned hotels, but what is also not commonly known is that all the business of ITC work synergistically with each other. For example, you walk into ITC hotels, you will find a Febel chocolate outlet there. And the paperboard
Ah.
business, for example, works remarkably well for ITC's stationery business. So I think they'll wait for it to come to some level of scale. I think there's still a bit of work to be done the operating profit margin level. That's simply because most of the brands are still at a building level. But the moment they get to a point of maturity and the operating margins start to take off, I think the market then can expect the FMCG business to kind of be demerged. But I think the run up in the stock price right now is a true recognition of the fact that there is merit in the business. It's a profit making entity. And perhaps in some ways, I think the market also missed the story. The question is, did you need to look at it as a secret business or an FMCG business? I think the maturity in the thinking now is coming through pretty well.
Right. Music to ears to all the viewers who already are shareholders of ITC, hoping for the best days to come ahead from here. Thank you so much for those insights, Krishna. Let me just go across to Binu now. There's been a very, very interesting story done by him. So, Binu, there seems to be a change taking place in the startup funding environment. We have also talked about this space earlier on the cover show as well with you. Help us with the insights of what are you seeing right now after 1 or 2 years of hyper growth that we've seen in the startup world.
Right, right. You're right, Sakshi. So, if you look at 2021 was an year of breakneck investing. 35 billion of VC money had come to India, or 40 plus startups became unicorns. So the reasons were multiflored, beginning with massive influx of capital that's coming to India due to excessive money in the global markets. A good portion of that money earmarked for alternative assets and emerging markets came to India. So that was a significant amount. And when this flood of capital happened, deployments became a priority, and the capital did not discriminate between the quality of companies or the founders. So the risk lens got impaired. The investment decisions were made, by growth as a yardstick and not profitability. And the fear of missing out also became a deciding factor in a lot of transactions. So consequently, the funding market became one of founders' market. In many cases, founders had multiple term sheets with them, and the investors had very little time to decide. Sometimes it's that short as a couple of days to make an investment decision. So
Yeah,
transactions were
absolutely.
oversubscribed in many cases. So
Mm.
it resulted in a record number of companies getting funded, and all-time high volume of capital came to India.
Mm.
So now, as you said, things are looking different. Things have reversed. Again, thanks to a multitude of global factors as well as some domestic, reasons. So the flow of money into global, large, aggressive funds have slowed down. Profitability has become a deciding factor. Questions are being asked on the quality of founders, the business models, corporate governance norms
Absolutely.
is very strictly looked at.
Yeah,
So yeah,
absolutely. You're right. Because a whole lot of discussion also revolves around is the dry powder running dry, and also whether winter is coming for the startup world as well. That's been talked about as well. Help us understand, what does it mean for the founders now? Should they be worried?
See, a good quality company, like a lot of investors say, need not worry, because these are cycles, and cycles essentially change. Those are cycles. So it's fine if an investor with a long term vision
Hmm.
dilute a bit more on his ownership today, because in the next cycle it is going to change, and he can really gain back his ownership. The good news is that, like you said, the capital pool targeting Indian startups is very solid. Unlike the previous cycles, if you look at the 2008 global recession or the e-commerce bust in 2015-16, Indian VCs today have a substantial war chest at their disposal. So most of the leading domestic funds have raised capital in the last 18 to 24 months. So it means good quality firms can now actually become more accessible and visible to some of the investors than last year, where they would have found it extremely hard last year to get allocation in these companies.
Absolutely. Well, thank you so much, Binu. We'll leave it at that with you, but I'll go across to Smita now, who's written a very, very fascinating story, something which has been in big trend right now as well. And we're talking about the new age private clubs as well. And she's done a deep research in India, the top-notch places, the top-notch private clubs that are emerging, especially for the new age millennial, founders as well. So on the one side, we're talking about. So Smita, help us with those details. What have you found out?
Thanks, Sakshi. So the private clubs are for youngsters and millennials. I mean, the idea is that the CEOs today are much younger, so are the startup founders and promoters. So they're looking at a place where they can network with like-minded people. And the older clubs now, most of them don't even take people, right? Like you can't enter a Delhi Gymkhana or a Wellington club now, anyway. So there is a new place. There is a
Yes.
place. There's a market for them, and they are targeting a younger customer who is looking for something different. So from A-list events across the globe to having Michelin stars chefs come and prepare food for you here in clubs here. There's a lot going on for these younger CEOs and promoters who
Sure.
are looking for a place.
Right, absolutely. But Smita, how does one really get the membership to these top-notch, upscale private clubs? And is there a criteria that one should meet? Help us with all those insights too.
Yeah, definitely. The whole idea is exclusivity, and that's why it's members only, and that's what spells luxury today, right? The more exclusive it is, the more luxurious it is. And so here it's only on invitation and referral based, and they have a long drawn out process, and you have to fill up, so once somebody has to refer you, and then they also like to see what you are doing, where you are headed, what kind of a person you are. There are lots of personality type questions which are asked, and on the basis of that, then they decide to select you and make you a member.
Right.
Yeah.
Well, thank you so much, Smita, for all those insights as well. And thank you so much, Krishna, Binu, and Smita, for being with us on this show and helping us with all the insights of these top stories that are covered in this issue. With that, I urge all our viewers, please, to go out there and grab your copies because this is definitely a very, very interesting read. So thank you, everybody. It's been great speaking to all of you. See you again on the next issue of The Cover.